Welcome to the second video for Charting Wisdom's Aussie and US market report for the week commencing Monday the 31st of July 2017. Here we're looking at the S&P 500 on the monthly chart. You can see the previous all-time highs back here in 2000 and in 2007 were very similar, very much a double top there. Since then we sold off really quite strongly down into the low in 2009, and we've been grinding our way up ever since, pushing all the way up with a couple of retracements here, here and here, but otherwise it's been up and away the whole way. Now I've been watching a target of 2,485 points as a potential top for the end of this move up. Now the reason for that is that if you look at the move down from 2007 to 2009, that range there, if we then add it to the high in 2007, it will give us 2,485 points. Now we'd reached 2,484.04 points, so virtually within a point of that target. Now in a normal retracement we'd come back 50%, and a 50% retracement brings us back here to the previous tops here at 2000 and 2007. So that's where we're looking at the potential resistance up here at the target level of 2485. The interesting thing is we've still got one day to go with July, but the volume is less than that of the previous few months. So that's interesting in its own right, that we're making these new all-time highs on less volume. Now when we jump across here to the weekly chart, we can see that this last week was actually, it's an up week, but it's also a doji, a sign of indecision. We opened at the, we closed at the open, indicating that neither the buyers nor the sellers were actually able to keep any of the gains that they had over the week. Now, having this coincide with the 2,485 target level also indicates, we're seeing potentially a bit of distribution, and this is seen more so with the spike in volume here in the last week. As compared to the previous sort of few weeks here, we've got the biggest move in volume, yet we've got a week which really is trying to figure out whether or not this is a top and we're selling, or whether this is still a place to buy with expectation of higher levels. Now when we jump across here to the daily chart, we can see from the November bottom here we've had good moves up, sideways, up, sideways, up, sideways, up. We broke out of that previous trading range it was in, and we've sort of a couple of days up, one day down, a couple of days up, one day down, a couple of days up, and then we get this big move on Thursday, which is the day that brought in the new all-time high. Now this is an outside day. As you can see, we made slight new all-time high, pretty much hit the target within a point of what I've been looking for, sold off really quite severely, but then by the end of the day turned around, pushed all the way back up to close in line with the previous couple of days lows. Now that certainly indicates that we're seeing some selling pressure coming into the market when you see such a larger range there compared to, well, you've got to come back here to the 29th of June to find a range that's actually larger than what we did on Thursday. Now, Friday here was an inside day. We actually gapped back down to open, pushed back up, closed a little bit under the high, and above the open, but again still lower than where we closed on Thursday. So that would indicate that the sellers were in control in the sort of last couple of days there. You can see that the highest volume for the week was the Thursday, the big outside day, and the volume on Friday was consistent with what we've seen earlier in the week and earlier weeks. Now it's trying to make up its mind as to whether it wants to go higher or not. You can see the number of different target levels I've had here, and especially this 2401 target. That turned out to be some pretty solid resistance, and what actually has set up the best retracement we've had since the November bottom. Now, if the 2485 target level turns out to be similar, we could certainly look to see a larger move back down. Keep an eye on these retracement levels here, because they will give us a guide as to how weak or strong any move down may be. Now I just want to jump over here to the VIX, because as we saw with the Thursday, look at the spike in the VIX. That is a very big monster move compared to a lot of the ranges in the VIX that we've had previously. Now, having said that, on the Wednesday we actually traded at the lowest levels that we've ever traded at in the VIX, which was a low of 8.84. Now, as quickly as we slowly ground down to that level there, but then we shot back up like a bat out of hell. But even then we pulled back to close well down from the high. However, Friday we did push higher and then do the same sort of thing, closing below the open this time, but again a little higher than where we were from the low there. That's quite a bit of a kick up in volatility, but as you can see, well down from previous levels of only a year ago. Now I'll wrap that up for the S&P 500 there. These are my contact details if you need to get in contact with me, or if you have any questions in regard to the report, and of course the disclaimer. Thank you for watching.